Stock markets in Europe are trading on the weak side this morning, with the UK's FTSE 100 index off around about 15 points, while the Euro Stoxx 50 index is lower by 10 points. In the commodity space, we are seeing a bit of demand for gold up around about $7, and oil prices are also creeping a little higher. In the FX space, the dollar is beating its rivals at the moment, and when it comes to the core government bonds market area, we've got UK gilts and German bonds also in favour, so suggesting a bit of a risk-off tone, with investors flocking to the safe arms of some of those traditional safe haven assets. Good morning, I'm Ishaq, Siddiqi, and welcome to your daily market bite. I'm going to give you a quick idea of what's going on in financial markets today. So, last night we had a very weak finish on Wall Street, with the S&P closing for, posting losses for the fourth consecutive day. In Asia we had a similarly weak session, and that's put on a bit of pressure on European trade this morning. When it comes to the US, the big driver behind some of the weakness that we are seeing, particularly in the last 4 days, is of course the Fed's reluctancy to taper asset purchases, and at the same time we have to also remember that we have the upcoming budget talks in Washington around mid-October, where US lawmakers have to essentially you could find a unified approach to raise the debt ceiling, a big concern for the market, and that's starting to creep through. And at the moment, it seems like we're going to have this big showdown in the US between fiscal policy and monetary policy. Fiscal policy being the budget talks, and at the same time, what the Fed has to say about monetary policy. At the same time, yesterday, we also had poor consumer confidence numbers out from the US, a bit of a dip down on that side. Housing numbers weren't too bad, suggesting that the housing market growth remains an upward trend, but nonetheless the Richmond Fed's manufacturing index did also slip last month. So again, some of the fears about the US economic data creeping through. It seems like there's going to be even further reluctance perhaps from the Federal Reserve for not to taper asset purchases in October. And then we've got to throw in the fact that we are getting mixed messages from Fed speakers, with certain members suggesting that the Fed will still taper around October, maybe even in November, whereas on others are more the idea that the Fed won't really start tapering until the end of 2013 or perhaps early 2014. So those are the big drivers, and that's really affecting price action, particularly in Europe at the moment, because we don't really have much economic data out during the course of this session. We've had some numbers out from Germany, consumer confidence out of Germany. It was slightly better than expected, a bit of an uptick, but nothing to really get too excited about. At the same time, we had French business confidence numbers, and they weren't the best. They were okay, and investors aren't really kind of enthused by the current data stream that we've had. Yesterday we had poor German IFO numbers, and that really kind of got investors worried about the situation in Europe, especially given the fact that we are now getting into an environment where we're going to have these fears about US economic growth kick into the market, as if lawmakers in Washington can't battle the issue of raising the debt. It's going to filter down to disposable incomes and start wiping away part of US economic growth. When it comes to some of the stuff that we're looking at for today, during the first half of the session in Europe, it's going to be pretty dull, at least on the macro side. And then after that, in the US, we may get some more direction, given the fact that we have US durable goods orders out, and we also have new home sales data. So look out for those. That is all for your daily market bite. I will see you guys tomorrow. Cheers for watching.